do you foresee a path of fiscal recklessness that's associated with Trump's taxation policies and what that does to the deficit?
I'm an optimist. When people are talking about something a lot, I think that's healthy. And there's been so much talk about that. The debt to GDP calculation is, we have fiat in the U.S., but that isn't sort of a free pass forever. But the fact that it's being talked about so much and that the current candidates for Treasury are so strong, you have to believe that, sort of, as you know from sort of recent U.S. history, Simpson Bowles, that there could be some way of thinking about how to both grow and also have our fiscal house in order. And that would actually temper any movement that you'd have sort of on the long end. So some people might say, we're going to get to 5% on the long end, for example. The question is an interesting one, but the answer is more along the lines I think of, first of all, none of us are 50 basis points smart right now, but importantly, how do we get there? Are we getting there because there is growth? There's real nominal and real growth in the economy, and then there's some term premium? Or are we getting there because folks are coming out and saying, you know what, I need real premium to own, the long end of U.S. sovereign? And I'd like to hope we're going to be in the former group. But of course, the bond market is a daily mark-to-market. So one of the remits of the Treasury Secretary will be to sort of draw that link between the sovereign's balance sheet and the bond market, right? And to look at that on an interactive basis relative to the effect of any kind of back and forth on tariffs.
Have you got any thoughts on who that might be, who the next incoming Treasury Secretary could be? Because I know that's a very open debate at the moment, but what do you think markets wants to see from a new Treasury Secretary?
Sri, I think the candidates that are on the screen right now are all excellent. They're all experienced, they're world class, and they really do understand this linkage between geopolitics, growing the economy, and doing so in a way that actually brings the right kind of term premium. Again, kind of looking at our fiscal house and then looking at what the bond market is saying in response. So I think you have really high qualified folks up for that.
Where does all of this put the Fed? And what, in your opinion, is the appropriate path for policy?
Well, I think the Fed's done a great job. That's a tough job. That's tougher than our gigs, right? I mean, they've moved cautiously. That was the right thing to do because you had 15 years of financial repression. You've had hot and cold. Recently we're up to I think 10 cuts through the end of next year, and now we're down to 3. So that's what the market's telling you, that the economy is actually in pretty good shape. And the Fed doesn't want to do Arthur Burns type of thing, so they don't want to have to, lower and reverse. And I don't think any of us are smart on whether they do one more, before the end of the year or not. We're talking about 25 basis points, right?
Does a pause make sense in December?
It might be. It might make sense, or it might be that they want to put one more up. But I'm not sure in the big picture it matters that much, because what the market is telling us is that the U.S. economy is fundamentally in sound shape. That we're growing, but that also there is, I think, on the margin, we will oscillate between fear of inflation and fear of recession. Of course, because it's such a huge tanker, and we're in this sort of potentially deglobalizing moment. It has an incremental complication to it, but I think the Fed is going to act very prudently as the data comes through. If they're going to move, they're going to move judiciously through the next year and a half of continued growth.